the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking sector. It is the 8th of February and I am Ruchika Chitravanshi. In today's episode, our cover story talks about why the government's bad bank is unable to onboard stressed accounts. In Banker's View, we have with us Onebanc founder and CEO Vibhore Goyal. For Banking for You, we will talk about what does discounted valuation mean for bank and investors. Our consulting editor Tamal Bandyopadhyay is joining us for the Expert Take segment, and at the end of the show, we will tell you the results of last week's poll and the question for this week. Finance Ministry recently said that it is targeting transfer of 1 lakh crore to the National Asset Reconstruction Company Limited, colloquially referred to as Bad Bank, from state-owned banks by the end of March 2024. A bad bank serves as an entity that consolidates a bank's bad loans or non-performing assets and works towards resolving or liquidating these stressed assets to recover maximum value. The progress of NARCL, however, has been in the slow lane. In our cover story this week, Manojit Saha and Kasturi Akhil peel the layers of why the government's bad bank is unable to onboard stressed accounts.
National Asset Construction Company Limited, or NARCL, was set up with a strategic initiative to clean up the legacy stressed assets with an exposure of 500 crore rupees and above in the Indian banking system. NARCL, commonly known as Bad Bank, was incorporated in July 2021 with a majority stake held by public sector banks, or PSBs, and Canara Bank being the sponsor. However, the progress of NARCL in resolving stress assets has been slow. Data shared by the Finance Ministry in Parliament showed 10 PSBs have transferred non-performing assets, or NPAs, worth over 11,617 crore rupees to NARCL till November 2023. NARCL acquired its first loan in January 2023. These 10 PSBs had NPAs amounting to 3.77 trillion rupees as of 30th September 2023. The security receipts issued by NARCL to banks are backed by government guarantee. In the last week of December, Finance Minister Nirmala Sitharaman highlighted the slow progress and called for great coordination between banks to expedite the onboarding of stressed accounts. Shortly after the FM's meeting, NARCL Managing Director and Chief Executive Officer Natarajan Sundar resigned. Canara Bank Chief General Manager P. Santosh was deputed to lead NARCL after the resignation of Sundar. One of the reasons cited for the slow progress of NARCL was that the offers it made were lower than the liquidation value of the stressed assets in most cases. PSB officials said there were valuation issues on the offers made by NARCL and they expected a better price.
Now, what may happen is that on each of those assets, the bank has its own view. Therefore, they have an understanding of the borrower and they also have an understanding of how much they can recover from out of the, even when they've gone into an NPA account, let's say. The second important thing that the banks have is that they also have the book value of that particular exposure, the interest pending, that is the interest outstanding, and then they also have the provisioning that they may have carried out. Now, all this really helps the bank in taking a guidance on the value at which the transaction is to happen. If anybody, NARCL or any other organization, offers them a less price, if there is no agreement on the valuation on both the sides, then there is no buyer, there is no seller. The transaction doesn't take place basically. So I suppose that could be one of the larger factors, most critical factors why, let's say, assets are not getting transferred to NARCL.
There were other reasons why asset acquisition was slow. Many assets that were identified for sale to NARCL were not even referred to the bad bank. Sources said initially 2 trillion crore rupees worth of accounts were identified, of which 76,000 crore rupees was never referred for the NARCL process. A significant amount was then resolved by the banks themselves. So the pool itself came down below 1 trillion rupees. Historically, PSBs have sold the least amount of NPAs to asset reconstruction companies, Reserve Bank of India data shows. In 2022-23, the sale of NPAs to ARCs shot up to 9.7% of the previous year's stock of scheduled commercial banks' gross NPAs as compared with only 3.2% in 2021-22. Mainly due to loans sold to NARCL, the RBI observed in its Trend and Progress report for 2022-23. While the private banks sold around 30% of the previous year's gross NPAs in 2022-23, the share of PSBs was less than 5%. Since 2015-16, according to RBI data, PSBs sold much fewer NPAs to ARCs than their private sector peers. In each of the last 7 years, PSBs sold less than 5% of the previous year's NPAs to ARCs. The reason for PSB's reluctance to sell NPAs is the fear of investigative agencies probing deals in case the price shoots up after such a sale. PSBs come under the ambit of investigative agencies unlike the private sector banks. So, how can NARCL's challenge be tackled?
To my mind, I think it's already a smooth process. If we try and sort of smoothen it any further, then there may be questions, that may come up saying that, look, are you passing the benefit which was sitting on the bank's books to NARCL, for instance? So yes, there is a certain amount of sort of, push from the ministry to do the right thing. But that ministry push, for instance, cannot really manifest itself into a wrong valuation at either side, basically. Otherwise, either side will remain, will have a doubt, saying the deal was actually done properly or otherwise, basically. And it flouts the rules of governance also then.
For now, there doesn't seem to be a perfect solution to the challenges faced by NARCL regarding its slow onboarding of stressed accounts.
In Banking for You this week, we have with us Vibhore Goyal, founder and CEO of Onebanc, an AI-driven neo-banking startup, in an exclusive chat with Business Standard's Suveen Sinha.
Hello and welcome to the banking show on Business Standard. You sold Co-Cubes to an MNC for a tidy sum, I imagine. And then you spent some time trying to figure out what to do next. And I think you gave it a fair bit of time. What made you zero in on neo-banking? What is it that you are trying to do here?
I gave my mom a HDFC Bank credit card and a debit card, right? And I asked her not to use the credit card for withdrawing money, right? Because there are penalties and interest and things like those, right? So she noted it down on a piece of paper, खरीदने के लिए and पैसा निकालने के लिए. But she was still not comfortable, right? And she stopped using the card completely.
Sorry to interrupt. Which card did she stop using? The credit card?
She stopped using both because she wasn't sure on what should be done.
Okay.
Right?
So why the confusion?
Why the confusion, right? Let me just use cash. Then the second thing which happened was to understand that both the markets. I was doing a lot of research, talking to people, talking to professionals to understand what do they expect. To my surprise, most of the people's answer were towards just keep our money safe,
Yes.
right? And while I was talking to a young couple, right, their 9-year-old girl came with a piggy bank, right, and showed me that piggy bank. Uncle, my money doesn't grow. Whatever I put remains the same.
In the piggy bank, the money.
In the piggy bank, right? Okay. The amount of smile you could see if she earns 1 rupee extra on that money, right, is like breathtaking.
Okay.
Right. So looking at all these problems, we decided fintech seems like an interesting place. The only improvement or only change which has gone into fintech or salaried market, which is what we are targeting, right,
Yes.
has been around, I think 20 years back when HDFC changed the game of how salaries were transferred, right? How the salary can be transferred if you have both employer and employee account in the same account. The
Yes.
money goes in the same day. Otherwise, it will take 3-4 days.
Right.
Right.
Now that you are in this sector and given the environment that we have, especially in the last few days, you know what I'm talking about.
Right.
And the fintech environment is in a certain situation. Do you have any regrets?
After CoCubes, I learned flying. Right. So I'm a pilot.
You are a licensed pilot.
Right.
Wow.
So one thing which any pilot will tell you, right, is headwinds are good when you want to take off. Right.
Okay.
They reduce the shorten your runway.
Okay.
Right. And these are like headwinds for us. Right. We're
Right.
taking off. My first startup, I was very, very sure in 2-3 years, I will become a billionaire. Right. I'll graduate, I'll become a billionaire, I'll sell the company to, right. Right. I'm not. Right. So basically, the idea, Suveen, is very, very clear that a company cannot be built, or a successful company or a profitable company cannot be built in 2 years.
Right.
Right. It takes time to build something which is valuable. Right.
Yes. Yes.
And if the time is 7 to 8 years, right, then you should be absolutely prepared for a lot of ups and downs.
Onebanc is now about 4 years and 4 months old, roughly.
Sure.
Will take a few days. So, and you have worked with payroll processing companies, and you have banks, legacy banks as partners. What kind of difference have you made so far? What have you done?
So when you talk about fintech or Onebanc specifically, Suveen,
Yes,
right,
Onebanc.
what we do is we plug into HRMS systems,
Yes.
we plug into merchants, right,
Yes.
we plug into banks,
Yes.
right. So we build a central place from where a customer can do whatever it wants to do, right, and he doesn't have to jump between 3 different systems.
So what you are doing, and sorry for the starkness of the question, but why do we need one bank to do it? Can't banks do it themselves? They have been there for years, some of them for decades. Why can't they do what you are doing?
They cannot go and tie up with HRMS systems, right? They cannot pull their data inside the HRMS systems.
Okay.
Right? They cannot go and talk to Make My Trip and pull all the things, do a compiling around it, understand what is going on, apply AI on it, and project to a customer. Right?
Yes.
So I have a habit of transferring X amount of my money to my mom as soon as the salary hits.
Okay.
Right? And I've been doing that for last 20 years.
Okay.
Right? It's the same account, it's the same amount of money, it's going to the same output folder. Right?
Yes.
Now, a bank system can obviously look at it and automate this for me, right? As soon as a salary hit, a pop-up comes, hey, Vibhore, do you want to clear out this checklist for you? Instead of that, it's a 3 minutes process.
Okay.
So there are some places where bank can optimize, right? When the data is completely with them, right? Then there are places where banks cannot optimize because the data resides with third parties, right? And they cannot pull out the data, right? There's a tag associated with the bank, right? Bank is supposed to do payment, investments, all of these things, right? A customer doesn't associate with saying, okay, if I want to buy an iPhone, should I go to Amazon or should I go to a banking app? What a bank does is clear to a customer. A bank cannot start doing something which is completely outside, but the customers are accustomed with something else.
Right. You talked about, making a difference in this area. What is next on your agenda? You also mentioned the regulatory environment. What kind of support would you expect from the system in your mission?
So next for us, Saveen, is to scale up, right? From 1 to 10, right? We have X amount of customer, we need to go to 10.
Where are you now? When you say 1 to 10, where are you now on that scale?
So we have about 1 lakh signed up customers.
Okay.
Right. We need to get to a million marker. Right.
Right.
That is in some way a knee point for us as a startup. Right.
And these customers are salary accounts holders.
These are absolutely salary account. All of them are above 4 lakh in salary.
Okay.
Right. That is our target segment. Anyone who makes a salary of 4 lakh rupees or above, or the other way to look at it, anyone who files a ITR today, right, is our target segment.
Okay.
Right. And in India, there are more than 6.5 crore people from the salaried account who file income tax.
Right.
Right. So market is large enough. Right. The next target for us is to get to 10 million customers.
Okay.
Right.
So 1 crore out of 6.5.
Right.
Okay.
What we need support on this one is obviously something which industry can support on, right? Being more open-minded and get lot more support from, let's say, NPCI, let's say government, right?
Yes.
On regulations being very, very clear. There are some places where things are gray. Today, it takes 3 minutes for a video KYC to happen.
Okay.
right?
Yes.
And before that 3 minutes, there 3 to 5 minutes of wait. Now 8 minutes, right? Our target is to open an account in 38 seconds, right? There are a
Wow.
lot of practices out there which says a customer starts to lose interest after 38 seconds. But for us, after that, if there's an 8 minute break, then this innovation is actually technically useless, right? I could
Yes.
have just taken 2 minutes and not worry about it.
So, Vibhor, thank you very much. It's been a pleasure having you on the show. Good luck and bye for now.
Thanks, Suveen.
Moving on to our next segment, banks' valuation discount to Sensex recently hit a 10-year high on the back of muted earnings of top banks in the recent quarter. What does discounted valuation mean for banks and investors? Kasturi Akhil decodes.
Banks, the biggest component of the Indian equity market, have been trading at a discount to the benchmark indices. The BSE BankX Index, which tracks the share price of the top 10 listed banks, has been trading at a trailing price to earnings or PE multiple of 15.3x, which is at a 40% discount to the BSE Sensex current PE of 24.37x. This marks the biggest valuation gap between the two indices in at least 10 years. Similarly, the BSE BankX Index price to book ratio or PB is at 2.22x, which too is 40% lower than the current Sensex PB ratio of 3.61x. Both PE and PB ratios are relative valuation metrics that provide an understanding of a company's financial health compared to its peers and the industry. Therefore, a low PE and PB value has led to the current discounted valuation of the banking index, indicating overall weakness in the bank's earnings growth. In other words, a discounted valuation essentially means a stock is attractively priced relative to its peers or a benchmark index, making the risk-reward component favorable for new investors. For existing investors, however, a discounted valuation would mean differently depending on the price at which they bought the stock. It may be a good time for interested players to purchase bank shares at the moment. The near-term outlook for the banking sector is anything but sanguine, according to market analysts. While some attribute the low profitability of banks to the ongoing contraction cycle in the net interest margins, others blame HDFC Bank for the relatively poor showing of the banking index. The HDFC Bank stock declined nearly 20% after it announced its earnings for the December quarter due to a decline in its net interest margin for 2 consecutive quarters and concerns regarding a slowdown in deposit mobilization. Relatively poor earnings in the third quarter of FY24 also triggered a sell-off in Axis Bank, IndusInd Bank and AU Small Finance Bank. While HDFC Bank's results had a rub-off effect on other stocks, these banks' earnings were also weak, mostly because of deposit concerns. Analysts say poor showing by banks is weighing on the broader market, given their still large weighing in the benchmark indices. While analysts warn of a further fall in banking stocks in the near term due to a combination of reasons, including increased market volatility and uncertain interest rate trajectory, investors might want to use this blip as a buying opportunity for long-term gains.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
So it may be a good time for interested players to purchase bank shares at the moment. For our expert take segment, I spoke with our consulting editor, Tamal Bandyopadhyay, on today's monetary policy of the Reserve Bank of India and its macro implications. Here's the chat. Hi, Tamal. Welcome to the banking show. We've just had the RBI monetary policy come and we've seen that the rate has remained unchanged. Can you take us through the broad features of the policy and the macroeconomic implications of the same?
Thanks, Ruchika. Yes, the policy is on the expected line. There is no change in rate. But where the market was divided in terms of expectation was about the stance. Would RBI change the stance? Now here also there is absolutely no change, which means the stance continues to remain withdrawal of accommodation. But what RBI governor has explained is this: don't equate this with a tight liquidity situation. He has categorically said that RBI will use all the instruments at its arsenal to manage the liquidity very nimbly. And he also used the word durable liquidity. So what at this point of time, what we have been seeing is there has been certain friction. Certain days liquidity is not there in the system, and it was pretty high quite some time back. It's for what quote unquote for exogenous factors. I think one of them, which he has not said, is the government is sitting on too much of cash, not using it, and things will even out. And at the same time, Reserve Bank of India is happy to use all the instruments to smoothen the liquidity, so banks do not have any issue with this. So stance remains the same, and interest rate also, the policy rate also, there is no change. He has reconfirmed his vow to fight the inflation to the logical end. So we have reached the last mile, but it's a very critical segment. He will not give up. So which means we need to wait for a rate cut. We'll talk about that later. The two more important thing is this. One is the inflation projection. Now, inflation projections for the year has not changed current year. It continues to remain 5.4%. He has brought down the inflation projection for the last quarter of this current year, which has to be, because to be in sync with 5.4%. When it comes to next year, inflation is pretty optimistic, 4.5%. That's what is going to happen. And the other part is this, of course, the growth 7.3 for the current year and 7% for the next year.
Tamal, the growth projection of 7% for next year for 525 is higher than what most agencies, rating agencies, IMF, etc., have projected. Where's this confidence coming from? And do you think we are being more optimistic?
Well, I wish I knew the answer. Let's not talk about the rating agencies. The government, finance minister, and the bureaucrats in finance ministry, they have been saying less than 7% growth, right? If you see that interim budget has spoken about nominal GDP growth, say 10.5%. Now, if your nominal GDP growth 10.5% and the real GDP are expecting 7%, then the inflation needs to be at 3.5%. That cannot be the case, because inflation is 4.5%. So which means nominal GDP growth, if RBI estimate of inflation is correct, 4.5% for next year. So the nominal GDP growth has to be 11.5% to have a 7% growth. So if you see, traditionally, Reserve Bank of India in general and the current governor, Mr. Das, has been pretty conservative. But on what basis he is saying this kind of growth, I wish I knew this, but he seems to be very confident, and it's very confident that inflation is on a trajectory of going down and growth is on a trajectory of coming up. So it's a wonderful situation.
So inflation is on a trajectory to come down, and he has reaffirmed his commitment towards bringing inflation down. When do we see a rate cut?
Well, if you see the underlying theme of the policy, I think we need to wait for the rate cut, because at this point of time, he has repeatedly reaffirming his fight against inflation. Did you notice that he had his first sip of water after half an hour, explaining everything? So he is not giving up his fight against inflation. He wants to bottle inflation, Gini. So we need to wait. Now, will that happen in June? Certainly not. Will that happen in September? Probably not even that. It has to be preceded by a change in stance. And also, of course, apart from the domestic factor, what's happening in US and UK, other thing we need to see. Now, if US Federal Reserve goes for a March rate cut, which is unlikely, at its next meeting, which is very unlikely, then it will be, India will be in a little bit, not as long as we have been expecting. But in all, I would not expect a rate cut in the first half of next fiscal year, which is till September.
So there is the MPC, which is on expected lines. And as Tamal has underlined again and again, that the commitment towards inflation continues. Even FM yesterday in the parliament said that inflation is now within the tolerance level, the tolerance span of 2 to 6%. So, of course, eyes will be there on future rate cut as well, as you have pointed out. Thank you so much, Tamal, for joining us today and sharing your insights.
Thank you.
It is time now for our poll results. Here's what we asked you last week. Is your bank responsive to your complaints? 43.9% of our respondents said yes, it is, while 56.1% said no, it is not. Paytm has been in the eye of a regulatory storm, with RBI flagging several compliance issues. Paytm wallet users can continue to carry on transactions till February 29. However, after February 29th, they will be able to use their existing balance till it is exhausted and not add any money to their account. In light of these developments, here's what we are asking you this week. Will you continue to bank on Paytm? Our poll is open today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, and our website. That's all we have for you today. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.